So welcome, Friday afternoon. The weekend is not far away. Quick survey. How many of you were there last night? That just quick show of hands, participated, had a chance to get some insights. We'll talk more about that. I want to explain the whole extra credit process. Anybody who attends these events gets professional activities credits. That's automatic. To get extra credit in this class, again, you need to write 2 or 3 paragraphs about your experience. And the goal is to share things that you learned, that you experienced, and that you might do differently next time with your classmates that probably couldn't make it. So your classmates will get the benefit from your participation. And you'll get to review what you did and how you did it. And it also gives you a chance to be a little more introspective. In addition to the 2 or 3 paragraph write-up, there's a 1 to 3 minute presentation that you get to communicate your thoughts to your classmates and open for Q&A as well. So if you want to get full extra credit, that's 1 point added to your final grade for this particular event. It's going to happen again the second Thursday of March as well, and the second Thursday of April as well. So we're doing our happy hours for the Accounting and Finance Club, the AFC. And again, you don't have to be an accounting or finance major to attend those, participate in those, or be active in the group. Any questions on the extra credit stuff? Are we making sense?
If we want to get the professional credit, do we still have to do the write-up?
Professional credit, you do not need to do the write-up. Just by being there, you were present, you responded in the chats. We know you were present. You do not need to do the write-up. To get the extra credit in this class, I need that write-up from you. And I also want you to give me the write-up at the same time it would be an email format or post in Blackboard at the same time that you present. So if Tyler, if you said, I'm ready to present, I said, great, do you have the write-up? And if you said yes, you're good to go. If you said, I'll have the write-up next class, I'll say, great, let's present next class. So when you're ready with the write-up, that's the time that you are also ready to present and we can present it in class. I want the write-up at the same time. I don't want to go down chasing and say, yep, I'll get it to you next class. Let me present right now. And that's not going to happen because I want to get that all done at the same time. Just make it easy, get it off your plate, get it off my plate. We'll do it at the same time. I have one more extra credit opportunity I'm going to be sharing as well. You've probably heard of something called the Wall Street Journal. I'm going to go ahead and share my screen and we're going to take a look at an opportunity for, let's see, we're going to get to the Wall Street Journal. They're having something called a Job Summit. In the chat, could you respond with the following? And the question I'm going to ask is, when is the best time to attend a job fair or a job summit? And the 2 answers that you can type in that would be the shortcuts are looking is 1 comment. So that's when you're looking for a job, okay? Or not, when you're not looking for a job. Or if you have another answer, you can put that in there as well. So looking, not, or something else if you choose. Please put that in the chat right now. Give me some feedback, and I just want to talk about that. Okay, 6 responses. We're on track. Definitely very good. Okay, so there we go. 10 answers, good, thank you very much. So I'm gonna look at the chat and let's see. I've got depends, I like depends. I like both. I like not, and I like anytime. Okay, so those are great, some great answers. The reason that it's great to attend these things when you're not looking for a job is because there's no pressure. The time you're looking for a job and you go to a job fair, you're scrambling. You get somebody in a live job fair, you're at a 10-foot table. In a virtual job fair, you're in a virtual room with the recruiter or an HR manager. So what's going to happen? You're going to be with 9 or 10 other people trying to talk to this recruiter, and you're going to be scrambling, and maybe you've never experienced a job fair before, and you're going to be a little bit fearful, a little bit of anxiety ridden, and you're going to be trying to get the attention of this person that could potentially hire you. Under stress is probably not the best situation to be at a job fair. If you go to a job fair when you're not looking, get the lay of the land, get a feel for it, the next time you go, you'll feel all that much better. The first time you go, it's a surprise. My last school, I took a student, had never been to a job fair, and she was starting to look for internships, but wasn't real familiar with them. So we got her down to a job fair. It was 45 minutes from Fond du Lac to Milwaukee. And she went and wandered and actually got to speak to some people. She ended up changing her direction from specifically accounting to actuarial science. She talked to some insurance folks. She talked to some people. She got some interesting insights and was able to chat on the way down and on the way back about career aspirations, career goals. And just by attending one of these job fairs, gained a lot of insight as a potential professional in these arenas. So I'm going to share this particular site with you right now. The Wall Street Journal has a job summit the afternoon of March 4th. And so when you go into that, I'm going to actually share this in the chat. I want to copy that over, go into the chat, and we'll post for you. Let's see, right here, Control V. There's the job summit. This is good for extra credit, and I'm going to work on getting it for your professional activities credit as well. The dean's been pretty flexible on any outside activities that a faculty member feels is worthwhile deemed for professional activity credit. And we'll have to get that approved, but that's not a big deal, I don't think. But I want to bring this to your attention because what's going on here? What's a job summit? Well, they're going to have a bunch of guest speakers. Here's some pictures of the speakers. Indeed has a couple. VP of Global Talent Acquisition, somebody you probably don't get to speak to every day. Executive VP from Intuit. These are the folks that make QuickBooks. You go down here, co-founder of Topicals, Working Nation president. Jerome Powell. You might have heard of a group called the Federal Reserve. Well, Jerome Powell is the chairman of the Federal Reserve. I don't know when the last time you heard him speak or had the opportunity. And I tell you, if you go on an interview and you're talking to an interviewer and you somehow bring up in the conversation, you got to hear what Jerome Powell had to say about the economy, about COVID, about careers, about jobs. Chances are the interviewer you're talking to never heard Jerome Powell, but they might think that's kind of cool and kind of powerful. Kim Scott, I was actually just earlier this week, Tuesday, I'm in a mastermind group. I was talking to a colleague from Canada. She brought up this book called Radical Candor by Kim Scott. So I actually ordered the book, and that was kind of interesting that she's appearing here too. So these are the kind of folks you don't get to see every day. And if you have an opportunity to take advantage of it, it's worthwhile. And it's good for my extra credit, but it's really even more important, good for your personal and professional development. It gets you in a direction. And it starts at noon with opening remarks, and you'll see the speakers, there's interview, what's up with the economy, some workshops, some professionals, what it takes to work for some organizations like Indeed, like Intuit, like Albertsons, some big companies. Hands-on workshops again, job seekers discussion, going it alone. So again, interesting seminars. To make it valuable for extra credit, you don't have to attend 100%, but I'm looking for 2.5. It's a 5-hour session. So 2.5 hours, at least half is probably good for extra credit. But again, it's what it's going to do for you, not so much what it's going to do for me. This is information and insight you will gain by being able to participate. So I urge you and encourage you, if you can, to take advantage and participate. So your next question in the chat, go ahead and let me know. Yes, I plan to attend. No, don't really have time for it. Not on my agenda. Or maybe I might be looking at it in participation. So here's my attendance question for chat. Please go ahead and give me a shout out as to what your thoughts are. Okay. So I've got mostly maybes and a couple of yes, I'd like to and I want to. And I hope you see the value in doing these things. And by the way, if you come across events like this, and I haven't talked about it, but you think, hey, is this good for extra credit? I'll tell you, 90% of the time, you're going to hear a yes from me. I'm real positive on extracurriculars, anything that helps you develop, anything that helps you move forward. So take advantage of these kinds of opportunities. And I'll tell you, internships, I'm a big advocate for internships. If you can, get 2. Why 2? Well, you get 1, 50% of the folks get hired from their internship. That's the national statistic. If you got an internship, 50-50 chance you're going to get a job offer and take it. The other side of it is it's nice to have 2 job offers, or it's nice to be making the choice rather than you having to decide, well, I got an offer right now, do I take it? But it's not really exactly what I want. but it's a bird in the hand. Maybe I really should take it. And those are kind of things you'll think through. And if you ever want to talk about that stuff, doors open, happy to have those conversations. Any comments or questions on the stuff we're talking about so far? So hopefully you can attend. Hopefully your schedule will allow for it. And hopefully you'll be able to give some feedback to your classmates, some who couldn't make it. They had to work or they had other obligations. And you will share your insights. So when they're in an interview, they can talk about, I was hearing about stuff about career. I was hearing about those kind of things. Okay. And then there's a question, would I advise a summer internship more than a school year internship? Yes and yes. Summer internships, I would also urge a summer internship outside. I mentioned this last night, outside of Florence, maybe outside of South Carolina. Maybe you have a chance to go to Silicon Valley in San Jose or San Francisco, or go to Boston, or go to New York, or go to Atlanta, or go to Charlotte. If you can, and if you can afford the rent in San Jose, which is pretty pricey, or to eat, we've got grants. We have peak and real grants that will help you pay your rent, pay your food if you're not being paid enough from the internship itself. Although many internships take care of housing, and they'll allot for that. If you go to Duke up in Charlotte, they have housing resources, and they're going to match you and get you set up, and they're paid internships. I will tell you, somebody like a Duke, they start opening the doors in August and close them by October for the following summer. Let me repeat that. They're going to open up the floodgates in August and say, hey, we've got some internships. And come October, they're going to close it off. And you say, wait a minute, it's February right now. I mean, it's too late for next summer. Well, from Duke, yeah, probably is. From most Fortune 50, Fortune 100, maybe even a lot of the Fortune 500, it might be kind of late. But on the other hand, they may have made offers and then they find out people turn them down and don't take them. And so maybe you can get a foot in the door in their ways. So the last thing I'll talk about is last night's gathering. Thank you for those that participated. I think we had like 28, 29 turnout. It was a good insight from one of our alums and Dr. Hari, our dean. The benefit of being able to hear from outside folks about what the field is like is powerful. You gain some insights. The nice thing is to arrive early and leave late. Yeah, we started at 6 and we ran until 7:30 officially, but there were 3 or 4 of us, actually 5 of us, that stayed till about 7:45, talked a little bit more. And there were 5 or 6 of us that were on at 5:45. And again, you got a sneak preview. They get to know you, you get to know them, whoever's might be on the call. So networking events, one of the things that came out last night, we surveyed and said, so what kind of things do you want to see in the future? Interested in resume and LinkedIn profiles, interested in career tips and tricks. The number one survey item that we gathered based on feedback last night was about networking. So the executive board, that was part of our conversation as a follow-up. Our executive board is taking that seriously. We have 2 more happy hours, a second Thursday in March, a second Thursday in April. I have no doubt one of those will be focused on networking. And networking is crucial. 85% of jobs are attained through networking. 15% or less are from the spray and pray method of, oh, I saw a job posted on a website. Let me go apply with the 500 other people. I think the average is 250 now. So even if it's 200, odds aren't real good. 1 out of 200 is going to get hired, 0.5%. So the ideal is to get to networking. And even if you find a job through that way, you still want to network to supplement your submission of a resume. But we'll talk more about any of that career stuff down the road if you're interested. And I will try to do that through the AFC. All right. Any other questions about internships? So to answer your question, yes, spring internships are good. Summer internships are good. Fall internships are good. Try to get an internship outside your current employer or job duties. You might be working at Piggly Wiggly. You might be working over at Lowe's or Home Depot. But if you can get an assistant manager role or a shadowing role or an internship role outside of your bagger role or a cashier role or other role, that's feasible. Because if you want to do something different. If it's just your job, that's not an internship. That's a job. That's making some money, keeping you in school, getting you some spending money, tuition money, book money, whatever it might be. But you want to get something that's career-oriented that's going to fill in some of the gaps and go in that direction. Other comments or questions? Then I'm going to go ahead and open it up to Ben and Boz. and let's go ahead and gain some insights from what they have to say. So we're going to take a look at, oops, make sure I've got the sound turned on. Share sound, optimize, good to go. And let's hear some more about the income statement, about journal entries, and we'll let Ben and Boz give us their insights. Why am I establishing secure connection right now? There we go. All right.
Good day, everybody, and welcome to lesson number 3 in the Ben and Boz narrated PowerPoint series. I'm Boz.
I'm Ben.
How are you doing today, man?
It's a beautiful day in St. Joe Township.
St. Joseph Township, Minnesota. That's right. That's where we are. Switching it back with Sartell with the last. We'll be next time.
You know, I'm excited to learn about the income statement, Boz.
Are you?
Yeah,
All
I
right.
am.
Well, I'm going to take the help statement. How does that sound?
I like
You can hear this on your own too.
Well,
because
that's
these
real
are
good. I
I'm
just said
excited to
beforehand. I
learn.
don't know what
Pre-recorded.
happened, but all right. Well, the income statement. So let's start off with an example here.
Good idea.
So we have an income statement here, and I prepped this one. And you were
No, I wasn't. What threw me off is that I saw there was net product sales and net service sales. So it's a company that has both a product and a service, but they also have significant technology and content expense. And so
Yep.
I wasn't quite sure who it was. And well, I'm cheating right now because I can see the answer, but
And it is Amazon, Amazon's income statement. So if you
Amazon.
look at that one, at the income statement, as Ben said, net product sales, net service sales, total net sales here, and we'll ask some questions.
Okay, I'm going to ask you to make a calculation for me. This is Amazon, and I assure you they don't have $79,000 in sales, product sales, or $27,000 in service sales, or $107,000 in sales. That's more than most houses are going for in the average housing prices these days. They are $107 billion and $135 billion. Can you take out a calculator, please, and calculate a net income percentage for me? And how do we do that net income? We take our net income down here, our 2371, divided by our total sales, 135,987. Please go ahead and do that on a calculator and in chat. Tell me what you get for a percentage. We get 2371. Divide that out by 135,987. 3 answers so far. Thank you. 4 answers. Let's see what we're getting. Looking like 1.7%. 0.017 converted to percentage, we get 1.7. Good answers. Okay. So thank you for sharing that. Now I'm going to ask for you to calculate the previous year, 2015. Take 596, that's 596 million, almost 600 million, over 107 billion, 107,006. So we take 596 divided by 107,006. And pop that in the chat, please. Yep. 107,006. So good. 596 divided by 107,006. Okay. So 5.6%. You're looking at that and you're saying, okay, 5.6, is that good or bad? 596. Actually, I believe you're trying to tell me it should be 0.56, not 5.6%. I get 0.00556 or 0.0056, which is 0.56%, not 5.6%. Okay. So we got to add the 2 zeros. So we're looking at that. So that's less than half, that's about 0.5% versus 1.7%. Is that good or bad? Well, it's all relative. If I told you 1.7% or 1.6%, you could say, I'm Walmart's better than that. Target's better than that. But 1.7 is better than 0.5 or 0.6%. So it's all relative. All these numbers mean something, and they're relative. And yes, it's easy to forget zeros, but if someone put 5% in there, 5% out of 100 billion is 5 billion, and I'm only at 500 million. Yep, I can see that. I can ballpark that. So thank you for your awareness and being aware that we got to be careful on the zeros. All right, I'm going to continue onward.
Questions that trigger discussion. Oh, go ahead.
I was gonna say, what do you think those service sales are?
Amazon is
Because, like, when I
profitable.
think of Amazon, I think of, well, I'm gonna go online, I'm gonna buy my products, and it's gonna show up magically a day later.
Yep.
So what's the service?
Well, I got to assume Amazon Prime memberships are in there. And
Probably.
that's going to be a pretty substantial one. So I don't know if they probably do some warranty services on some of the products that Amazon. I mean, they asked me if I want to buy warranties periodically.
Okay.
Do you have any other guesses on that side?
I was anticipating it might have some cloud.
Oh, cloud,
computing
yeah,
type stuff where
totally,
they
totally.
provide some service around that.
Yep.
Maybe.
Mhm. I think they sell. Well,
Probably
yeah,
sell data, I imagine.
some data, and I was just kind of wondering about their movies. You know, some of that you get through Prime.
Yeah,
I don't know
but
if that'd be a product sale or if that would be a service sale, like when they're actually, if you want to buy a movie or something like that or rent it.
And the same thing applies to Amazon Music, where you can
Yeah,
not
totally.
just do the Prime, but get the
Totally.
higher membership with the music. Is that a service or is that a product?
Yeah, we'd have to we could dig in and learn more. So, but it's yeah, those are a couple of their big accounts there. $177 billion in total. So the first question there is Amazon a profitable company? So I created these slides, and when you saw that question the first time, where did you look?
Well, actually, I looked a couple of places. Profit, obviously, you think you're going to be drawing net income down at the bottom.
Yep.
And you see that, all right, they started at 596 in 2015. Then in 2016, they bumped way up to 2371.
Yep.
And then they're at just a hair over $3 billion in 2017.
The simple answer, yes, they're profitable.
I can't see
Yeah,
2017 either, by the
We're
way.
going a little bit more and going up the income statement. So that net income's the bottom line.
Yep.
And we're going up the income statement, looking at, well, operating income. Have they had steady operating income growth as net income has grown?
Yep.
And it looks like 2015 to 2016, from 2.2 billion to 4.2 billion. Yeah, they grew a ton.
Almost double.
Yeah, but then 2017, it kind of stagnated.
Yep. It's an interesting point there. I mean, their revenues really grew, but their expenses grew even a little bit more then, and that's why the operating income went down. And then really the only reason that net income was up, if we keep tracing this one down, because, well, we can actually look income before income taxes is down as well. But then net income is up. The reason is the provision for income taxes, and that actually relates to the tax reform that we just saw, some of the corporate tax reform. The actual reasoning behind that is way beyond the scope of this presentation today. So
That is interesting because provision for income tax is for 2017, but I thought tax reform only kicked in 2018.
if you really want to know on this, because this is because I'm a tax guy, this relates to the remeasurement of deferred tax assets and liabilities at the lower corporate tax rate.
Sounds like a great topic for intermediate.
For like
accounting,
way
doesn't it?
beyond now, yeah, that's right. But yeah, so are they profitable? Yes, we looked at some different lines of profitability. How much have they grown over the past 2 years? It depends on what you're talking about with growth, but you could go right up to the sales line. They've gone from 107 billion to 177 billion in a 2-year period. So that's 70 billion of growth. That's about 65% growth over a 2-year period.
Quite the jump.
That's pretty good, but look at net income growth.
Net income growth has gone up by about 5 times over that period. Now, some of that is that tax reform in there, but if we look at the income before income taxes, or or maybe that operating income, it's roughly doubled over a 2-year time
It is
frame.
interesting.
Income
Over 2
from
years, you see a lot of the
operations.
growth, but
That's
just
good-
from
good number
2016
to
to
look at.
2017,
Yeah.
maybe not as much.
That's true. A lot of sales growth.
At least
but,
the operating income.
Yeah,
Yeah.
exactly. And then is Amazon paying more taxes as it grows? Well, certainly from 2015 to 16, as they grew, they paid a lot more taxes, but then their taxes went down in 2017 due to
kinda
tax
jumped the
reform.
gun on some of
We
these,
were
didn't we?
excited about it, so but we're the hosts. We can do what we want. But,
I like that.
Yeah, totally. So an overview of what we're going to be talking about today. We're going to understand the concepts of cash versus accrual accounting. We're going to understand
It's a cruel world, boss.
that's like a really lame old joke. It's a cruel world.
A cruel world.
You were waiting like so long to say
Yeah.
that. But, all right, understanding.
No regrets.
No, that's great. Understanding revenues, expenses, and net income. Learning how to prepare journal entries for the income statement accounts predominantly. Learn how to prepare an income statement. That's the fourth one. One concept that we want to talk about first is the operating cycle, just so you understand how companies operate. So a normal company, they don't start with sales because you need something to sell. All right, so companies purchase goods. That's the first thing that they do so that they have something
Buy
to sell.
stuff, sell stuff, collect stuff.
And they often do that on account, meaning they don't pay for it right away, but they're going to promise to pay later, oftentimes maybe 30 days later. And then the companies are going to pay for those goods with cash. After that, then they are going to sell the goods, again, often on account. They might give their customers 30 days or so to pay, and then the customers will pay them, and the company will receive payment, and they'll just kind of continue that cycle. And certainly, real-world application, a lot of this is happening at different times, and it's intermingled and everything.
It seems kind of risky to me. If you're buying something on account, so you promise to pay, but what if all of a sudden sales fall through and you don't get the cash to pay it?
Yeah.
Couldn't that be a little bit of a risky
Totally
cycle?
happens. And in that situation, a company will usually borrow at that point in time. So they'll go to the bank, try to borrow some cash. If that doesn't work, they could go to the stockholders and ask for some more capital. If they can't access those two things, you could have a company that ends up declaring bankruptcy at that point in time, basically because they purchased too many goods that they couldn't end up selling.
Interesting. I wish we knew how to calculate some of those times.
That's true. Calculate those. I think that's lesson 12.
It is
Wow,
lesson
we're only
12.
on lesson
Trying
3.
to tee you up for that. I'm
You are.
excited for it.
You think anyone will keep listening all that time?
Oh, I think you're going to mandate it in classes. So.
That's a good point. So, all right, accounts receivable and payable can be significant. And again, we just kind of talked about those on the operating cycle. So for Walmart, we think of Walmart's revenue, they're finally above $500 billion. So a
Half a trillion dollars.
They grew really rapidly for a while, and then they slowed down once they approached that $500 billion mark. Costco is really, and Amazon have been big competitors of Walmart. Their accounts receivable are not too big. Well, when I say not too big, I mean that's $6 billion. That'd be big for me, but for Walmart, that's not super huge. These are mainly selling cash.
I was gonna say that'd be interesting because credit cards here don't count as accounts receivable, and so because usually they collect those within.
Yep.
Credit card is considered cash sales,
accounts
by the way.
receivable, do you know what makes that up?
I don't know if they offer some financing to some customers for larger purposes.
Maybe some like commercial customers.
Possibly some of that kind of stuff that would fall in that. But they do have huge accounts payable for $46 billion. That's what they owe their vendors. That's what they owe. Johnson & Johnson or Kraft Foods or just all the vendors that are.
That's
out there.
probably part of their cash management strategy, though, right?
Yep,
Trying
totally.
to delay the payable as long as you can and shorten the receivables so you collect as quickly as you can.
Totally. And then just pulled an example of another company that also has big receivables, though. So Walmart's there's the Fortune 500 list, the 500 companies in America with the most revenues. Walmart's number 1. Number 2 is ExxonMobil with $244 billion.
So half the revenue, but they're still number
just wanted
2.
to show the difference there. They have accounts receivable of $21 billion and accounts payable of $22 billion. Very similar. So just an example of ExxonMobil accounts receivable are a lot more significant compared to their revenues than for Walmart. And that's just selling. I believe that would just be selling gas to gas stations.
Yeah, I would imagine it's probably the nature of their business. Walmart is direct to customers, whereas Exxon sells it a lot of times to another.
Goes to the business before the end customer. Exactly. So if we look at revenues and throw a few definitions, and again, we just got Amazon on the bottom for you, but it's a mouthful, but revenues are inflows of assets due to regular or ongoing transactions. They can be in cash, like we saw with Walmart, or they could be in accounts receivable, which ExxonMobil does a chunk of, and then when that gets collected, it becomes cash.
Yeah, so a simpler way of saying inflows of assets due to regular ongoing transactions, it's when your company provides a service or a good, and they're going to get paid for it, either immediately when they provide it or sometime down the road.
Yep, exactly. And so in the revenues, we record them when they're earned, and they're considered earned when the goods are delivered or the services are provided. And just go ahead.
Oh, I was going to say that's already simplified.
By the way, revenues are, if you remember that OIF, operations, investing, financing categories, revenues are from operations. Now you might have an asset you bought, a building, and then you sold the building. That's not considered revenue because unless you're in the real estate business, you're not in the buying and selling of businesses, of buildings. So a building is something that would be other gains or losses and outside the normal revenue stream. It's still, you can make money, you can make a profit on a building, or you take a loss on a building you sell. But Walmart does not take profit and losses on buildings because they're not in a real estate business. They get revenues from the products and services they sell directly.
By definition, they just came out with some new guidance on revenue recognition that it's really a lot more complicated than that, isn't it?
Yep, absolutely. So probably an intermediate accounting course, you dive into more of those definitions behind it.
But in this course, we'll stay higher level. It'll be very clear when it's time to recognize revenue.
Yep. So these are the accrual accounting rules, and it's important. This isn't when cash is received. This is when you're delivering goods or providing services. And one thing to point out is just there is something called a gain, and that's more of a one-time isolated event. You can see it's an inflow of assets due to a peripheral transaction. That's a gain. So that would be if Walmart actually sold one of their stores or a piece of land.
Let's say one of their trucks.
One of their trucks, yep.
And they don't always have a gain. It could be a loss, which we'll get to. But
you'll teeing up the next slide.
We'll say that truck was worth on their books $100,000, and they sold it for $150,000. They recognize a gain of $50,000, but that wouldn't fall into revenues because revenues is for regular ongoing, and they're not in the business of selling trucks.
Operations.
Yep.
Maybe they should.
I wouldn't buy one.
Drive revenue growth.
Well, perhaps, but sell your trucks that you don't have anything to deliver your goods with. But different discussion. So expenses, just, kind of the opposite. It's the outflow of assets due to the regular ongoing transactions. Again, it's usually in cash or through a payable or liability, which you then will pay for in cash. It's recorded when it's incurred. So with expenses, a key term is incurred. They're trying to, the accounting rules, GAAP rules are trying to match the expense to the revenue. So in the period you earn revenue, you want to match the expenses to it in that period. There's specific requirements in order to record an expense. It has to be probable and reasonably estimable. So, yeah.
So basically what that means is, yes, you're going to have to pay it, and estimable, you can guess how much it's going to be.
Yep.
And so I like to think of, when I think of the word expense, I think of cost of doing business for a lot of these, where Walmart, they have to keep the lights on, so they're going to have an electricity expense every month or every year, whatever they're recording their financials.
Yep, exactly. So, and when we say estimable, that's because you don't record the expenses just when cash is paid. You record them when they're probable and reasonably estimable.
And that actually fits in with the electricity bill. So say Walmart, it's December, they receive an electricity bill, they have to record an electric expense or utilities expense in December, because that's when they use the lights, even though they're not going to pay that bill until January.
Next year.
So cash isn't going out the door until January. They still have to record the expense in December.
Because it was during December when the lights were on, trying to help them sell the goods.
That's when it was
during
incurred.
that period. Yep. And then an outflow of assets due to a peripheral transaction, that's a loss. Just go to Ben's example. Walmart has a truck for $100,000. You only sell it for $60,000. You got a $40,000 loss. It's an isolated event. A knowledge check, gonna let you do this, Ben. All right.
all
So
right.
order the accounts as they would appear on the income statement. Right now they're in alphabetical order.
Okay.
All right.
okay.
So
well, we're gonna start with revenue because
Yep.
it's always gonna be revenue minus expenses.
Yep.
Revenue
It'll be
first,
sales or
good.
service, but I remember Amazon had sales revenue first, and so I'm gonna do sales followed by service.
And I don't know if you actually have to include those in that order. I mean, it's the point is revenues are first. So
I don't know this, but I'd be willing to guess they probably put whatever is highest.
That's a good point.
first, maybe.
I-
a little more significant to the business.
well, I was gonna say I'd take that bet. No, I'd bet with you is what I mean. So
We got to find someone
you
who
go
wants to
bet
bet the
against
opposite
us. You're
side.
listening and you want to bet against us. So, all right. So which of
right.
the expenses is going to come first?
Cost of goods sold or cost of sales in this case usually goes
COGS or
next, right after
costs,
revenue.
same
Yep.
thing.
Then what kind of expenses?
Then I'm going to go with general and admin expenses.
Sure.
SG&A,
what are
selling, general
expenses when
admin.
you think about those?
When I think of that, I think that'd be like your selling expense, your marketing expense, maybe your insurance expense, maybe rent on an office building, things like that.
Yeah, salespeople, your headquarters employees, CEO, people like that, and other things you listed. How about after that then?
Then it gets a little bit trickier, but I'm going to go with interest expense.
Interest expense. Yep.
And then we're going to put the gains and losses. Sometimes those are netted together.
And I think I think it probably depends on how big they are. I believe I've seen that one both ways. So which order those go into, I don't think is critical on this one, just to know that they are together. All right.
And then the last one, always the last expense you're going to see is income tax expense.
Good job, Ben. 8 for 8. You get an A for today.
Thanks,
Be
boss.
proud. So,
In fuego.
In fuego. That's right.
I don't know how to say on fire in German, so.
You might have to look that up. But. So subtotals on the income statement, the first one that we have is gross margin. Amazon actually did not have that, but I think most
Gross
companies
profit?
do have that. It's sales minus your cost of sales. You have something called EBITDA, earnings before interest, taxes, depreciation, and amortization. So you're going to also subtract from that one your selling, general, and administrative expenses. And this is an important metric that's actually looked at by investors. And that's
We
why
talked
we're
about
gonna pull that
depreciation
one out
already.
separately. We've got operating income, which is then going to subtract depreciation and amortization.
Just
Investors
drop the DA.
drop the DAS. That's right.
Good.
That one's also looked at quite a bit. We have
Yes.
income before income taxes. So we're going to subtract the interest expense, net of the interest income, and then subtract the peripheral losses, net of the peripheral gains. And then finally, we're going to get down to net income. In order to get there, we are going to subtract the income taxes.
There's a lot of steps. I think it's good to point out that not every company is going to show each of these different breakouts.
Yep.
And not that they don't know the breakouts, but for different purposes, they're going to show different income statements.
No, Amazon didn't even show them all. So it's just what they thought would be the most useful to their investors.
Got a side question for you.
I'm ready.
I've heard the income statement also called the profit and loss or the P&L.
Mm-hmm.
Do you know why it's called income statement or P&L?
P&L.
Or what the difference is?
I do not know the history on that. I would have gone back to just the difference between hola, que pasa, and all the different greetings. It's just different ways of saying the same thing. Had you had any different opinion on that one?
No, it was just a good question. On my experience, I figured income statement was used more academically,
Okay.
and P&L or profit
Oh,
and loss
interesting.
was used more when I was working.
Okay.
And so, if you're listening, I just don't want you to be surprised when you
Yep.
start working and someone's asking about the P&L or the profit and loss statement.
Yep.
Just so you know, it's the same thing as an income
It
statement.
means the same darn thing. So just kind of like my wife and my spouse to me are the same thing. So why should you care?
person.
It's the same person. Yeah, it's the same thing. Same person. So
I knew what you meant.
I appreciate it. So why should you care about the income statement? Well, investors and creditors, they want cash from their returns, and you're going to generate cash from the income statement because net income and cash flows over the long run are usually somewhat similar. Not exact because there's different rules about when you record income and expenses, but they're going to be somewhat similar. Increase in revenues often gives you increased income and increased cash flows. Not always, but often. Expenses, you want to look at them. Are they increasing more or less quickly than revenues? We saw some of those with Amazon, that maybe the expenses weren't always acting the way we would have expected. And then net income. We got to analyze the income statement to understand if that's increasing. It's one of the top metrics looked at by investors.
And just a quick note on cash flows. Just because a company has positive cash flows or positive net income, that doesn't mean that all the investors get that cash flow or get that net income. A lot of times companies will reinvest most of that back into the business,
Yep.
but after a company matures, then a higher percentage of that cash flow or net income is going to be dispersed through, say, dividends.
Yeah, exactly. It's a great point. So the accounting
Oh,
equation.
I love this thing. I'm glad to be back at the accounting equation.
You remember
I'm
this?
glad you love it. You're an accounting dude, but so
Dork, I think. Is the
accounting
word.
dork.
Yeah,
Yes.
that's fine.
Yes. So assets equal liabilities and equity. And again, as a refresher, this is straight from lesson 2. A debit will increase an asset, whereas a credit will increase a liability, and a credit will also increase equity. Now we're going to expand on equity a little bit, and we're going to see that a debit to equity generally will happen if you either have a dividend or a loss, whereas a credit will happen when you have income. So to break that out a little bit, revenues have credit balances, and expenses have debit balances. So if you have revenues that are bigger than expenses, you're going to have a net credit, and that's going to be income. If you have expenses that are bigger than revenues, that would be a net debit, which would be a loss. So revenue examples. I'm going to quiz you on some of these here. Ben, you ready?
I think I can handle it.
I think you can handle it.
Ben
All right.
Trinka, CPA.
Yeah, we'll find out. So let's say a company provides $100 of services for cash. What do you got for a debit and a credit?
All right. Well, I know we're going to be receiving some cash. So if we receive cash, it's going to be an increase in cash, which is an asset. So I'm going to debit cash for 100, and you just told me revenue is increasing on the credit side. So I'm going to credit revenue or service revenue.
So you write down the numbers,
Nice work.
figure out what cash is
We're going to
doing.
get a little tougher here,
The
though.
other
This time,
side
the
has
company
to
is gonna
be
provide
whatever it
150
is, like
services
service
on
revenue.
account
Okay. Well, they're providing the services, and so just like I saw in the first one, we provided services. I'm going to credit revenue, service revenue, for
150.
But the debit, because you led me on, I know it's not going to be cash.
That's right.
It's on account, so I'm going to put accounts receivable for my debit of 150.
Nice work.
Yeah.
2 for 2. And then after we sell an account, the next thing we're going to do is collect.
Hopefully.
Hopefully we're going to collect. So we're going to say we do collect here. They'll have to tune back in on lesson, I don't know, maybe it's lesson 5
5,
when
I
we
think.
learn that we
Should
might
be a
have
review.
this account. But all right, we collect the $150.
All right, so we collected the cash, meaning we're getting cash. Cash is increasing, so debit my cash for 150, and then accounts receivable is the one I'm actually going to credit here. So I was owed 150, but now when that person paid me, they no longer owe me, so I should get rid of the related receivable.
Yep. Accounts receivable is an asset. An asset is decreasing. When an asset decreases, we credit it. All right, let's get on to another revenue example. Let's say that this time a company collects $200 of cash for services to be provided in the future. Now, this is a big, if this was the cash method of accounting, we would record revenue right now, all right? But we're under the accrual method of accounting, which is GAAP, so these services aren't going to be provided into the future. So I'm going to say the debit's definitely to cash, and I know that. That's not the tough part. What's the credit?
Cash is up.
Credit
You
is
got
to
it.
unearned revenues.
And what kind of account is unearned revenue?
That's actually going to be a liability account because
Okay.
at this point, this happens a lot with insurance, right? 200 cash for services. So my wife and I, we just paid our insurance premium for our car for the entire year. We had to pay up front, and then we have car insurance for all of next year. And so what the insurance company is recording a debit to cash for $200 because they received it, but now they owe us insurance coverage for that next year. So because they owe us something, that's a liability when someone owes. So in that case, unearned revenue is going to be a liability account.
Yep, you owe someone. You owe someone that service. Okay, well, how about then in the future? Let's say you perform those services then.
After I've been insured for a year, for example, well, in that case, the insurance company doesn't owe any more insurance, so they don't have any more of a liability. I want to get rid of the liability that I had, so I'm going to debit unearned revenues for 200 because debit decreases liability.
Yep.
And then I provided the service, so now I can recognize revenue, and I'm going to credit revenue.
Yep. So
Move it
unearned
from
revenue
the-
is liability. If you
There's
have
our
increased
adjusting journal
liability,
entry.
it's through a debit. So that's why
Moving
we
from the balance sheet
All right,
to the
now
income
to
statement.
expense. So
Can I quiz you on
No
these?
cash.
These are my slides. I know the answers. I know they're coming. So,
Okay, okay.
Well, you probably know them too. So.
I do know them, but that's okay. No, we're good. We're good. Go ahead, keep quizzing me.
We're doing so well. So,
Oh, all right.
A company pays interest of $100 in cash.
All right, well, they're paying cash, so I'm going to credit cash. Cash is an asset, so decrease an asset means credit it. Credit cash for 100. And then this is where I go back and remember that accountants are not creative with their naming conventions.
Sure.
So if I see interest and I know these are expense examples, I'm just going to call it interest expense.
Wow.
So debit interest expense for 100.
That's right. All right.
All right.
How about the next one? A company pays income taxes of $90 in cash. And once again, the accountants are not creative with names.
Paid in cash, so credit cash for 90, and then they paid income taxes.
Cash
Go ahead and call
down,
it income tax
cash
expense.
credit.
Debit it for 90.
Exactly. Remember, when we have expenses, increases to expenses are debits. All right, we're going to get a little bit more tricky now. A company incurs wages to pay its employees of $250.
There's another adjusting journal entry.
Yet. So this really
Okay.
means that someone works, but and it comes to the end of the year and someone has done some work for us, but maybe we pay them every other week, and that every other week isn't going to happen until January 5th or something like that, right? So they work $250 worth of work for us in December, not going to pay them until January 5th. Then
Happens
what?
all the time. Then, well, we already know we're not creative, so we have wages and they've been incurred. We record expenses when they're incurred, and so we're going to debit wages expense for 250, but we haven't paid them yet, which means we owe them. And if we owe someone, that's my key. That's a liability. So I'm going to create a liability for wages payable because I'm not creative. So debit wages expense for 250, credit wages payable for 250. Final answer, lock it in.
And that's what it was.
So again, one income statement account, debit the expense, one balance sheet account, credit the wages payable, and no cash is adjusted. This is our adjusting journal entry at the end of the time period.
So I'd show the answer by the time you said final answer. So that was less impressive. So,
Okay.
and now you know the fourth one. I bet you know what's coming, that we're going to pay off those wages payable.
Yeah,
All
we
right,
pay
well, if
it.
we pay them off, that means
This is
the
not an
cash is going
adjusting
out
journal
the
entry.
door. So
This is just
decreasing
paying the
asset,
wages.
Credit cash for 250, and then we're going to debit wages payable because we don't owe it anymore after we've paid it. So
li-
debit wages
If
payable.
liability decreases, we debit it. Now we're going to do a kind of a combined example.
This one's tough.
Yeah, maybe. I don't know. So it's tough if you're new. So combined example. And in this one, let's say a company purchases inventory for $300 on account. This is more of a lesson 2 thing right here. So
Yep. So this one, lesson 2, I created lesson 2,
You
everyone.
did,
So
you did.
inventory is an asset. I'm going to debit that asset for 300, and it's on account, meaning I owe someone. So I'm going to credit accounts payable for 300.
nice work.
There we go. It's on my books now.
That's right. Now we're going to have our first, I don't know, we have a transaction coming up that has 2 journal entries.
Go from
So
double
let's say
entry to quadruple entry
Yes.
accounting.
This one is tough, definitely. So a company sells that $300 of inventory for $500 of cash. So the $200 difference, that's their markup. That's their profit on that sale.
It's pretty nice, bro.
Gross profit.
Yeah, that's great.
Yeah. So I see $2 amounts. Maybe that can help you remember that you need 2 journal entries for this. But we have $300 of inventory, so I want to get rid of that inventory. I no longer have it.
Do the revenue side first.
The revenue
That-
side
that's
first?
that's the one I have listed here
Okay,
first.
okay.
all right?
So first, on the revenue side, I received 500 in cash, so I'm going to debit cash for 500, and I
Good start.
sold the goods, so I'm going to credit sales revenue for 500.
Nice work.
Okay.
Can I do the inventory side now?
Yeah, no, you can.
All right. So I was saying the inventory, I don't have it anymore. It's no longer in my store or my warehouse. So I decrease an asset. I'm going to credit
Clear the
inventory, for
inventory.
100, and then I'm going to debit something called cost of goods sold, which is just the kind of like
Expense.
inventory expense.
Yep,
It's
yep.
basically the accounting way of saying inventory expense.
Exactly. Inventory, we don't have something called inventory expense. It's called cost of goods sold instead. That's an increase to an expense, though. And then let's say they pay off the $300 on account. This is more of a lesson 2 question again.
All right, so the cash is going out. We're decreasing an asset, so we're going to credit cash for $300, and then accounts payable is going to be debited for $300 because we owe the money, and that was a liability, and then we paid them back, so we decrease the liability by debiting it.
Yeah, and just an observation, Ben was talking through that kind of like I would, in that you usually went to the easiest side first, right? If cash was involved, it didn't matter whether it was a debit or a credit, you just took care of cash. That was the easy way to think of it. And then, I like that approach because then you know that the opposite is kind of what you need. If you knew cash was credited, now you know the other side has got to be debited, as an example. Well, if we continue on here, we'll just look at the T accounts. So if I sum up all those journal entries that we just had, and only the income statement ones, so we're not going to be looking at cash, accounts receivable, accounts payable, or inventory, just because we're not focused on the balance sheet right now. But if I look at just the income statement accounts, here they all are. So the service revenues, we sold goods, we performed 3 different types of service revenues. If you went back and look at those journal entries that totaled up to $450, we made that one sale of $500 of goods. We had interest expense, we had income tax expense, we had wages expense, and we had cost of goods sold. Just one point to note on these is that when you do have more than one item in a T account, you sum those up. And in this situation, just everything is on the credit side. If you had items on both the debit and the credit side, you would still, you kind of sum up each side, but then net them together to figure out one account balance.
And it's more common to have both debits and credits when you're looking at balance sheet
Exactly,
accounts.
exactly.
But it could happen occasionally with income statement accounts too.
Yep, certain returns or something could happen. But so prepare the company's income statement using those T accounts. We're going to start with the service revenue of $450, add in the sales revenue of $500, subtract the cost of goods sold of $300, and we have gross margin of $650.
Or gross
We're then
profit.
going to subtract the $250 of wages expense to get down to operating income of $400, or EBIT. We are then going to subtract interest expense of $100 to get down to income before income taxes of $300. We're going to subtract income tax expense of $90 to get down to net income of $210. And then a question for you, Ben. So if this company had 100 shares outstanding, what would this company's earnings per share be?
I think you kind of gave me the answer, or the way to solve the answer in the
All right.
question there. Earnings per share. So my earnings is 210. That's net income, and 100 shares are right there. So 210 divided by 100 is $2.10 per share.
You did that math in your head very good.
Is this thank you? Is this a good earnings per share number? Is it bad?
That'll be a focus of lesson 12. But I think the short answer is it's not good nor bad until we can compare it to the company's
It depends.
history and to maybe some competitors as well. How much is this company growing its earnings per share versus how is the general economy and its competitors doing?
Absolutely.
Yeah, but it's good that it's positive and not negative. I think
Yeah,
that's
I'd always take a
good sign.
positive over a negative.
Totally,
Yeah.
totally. Key takeaways from this one as we wrap this one up. We talked about revenues, expenses, and net income. And again, record the revenues when they're earned and record the expenses when they're incurred. Match them to the revenues. When do we record transactions using the journal entries? Well, the revenues are credits and the expenses are debits. And again, cash receipt does not equal revenues and cash payment does not equal expenses. We follow the accounting rules that we just talked
Rule
about
accounting.
and know how to create an income statement as well and go through those various subtotals. That's all I've got. Any final parting comments that you have, Ben?
Okay. Any questions you have? Hearing none, we're going to jump over to the Excel tutorial and get a good feel of what the Excel insights are and some shortcuts to go with that. So we'll go ahead to Excel and play on.
Hello, everybody, and welcome to Lesson 3 in the Ben and Boz Microsoft Excel video tutorial series. I'm Boz.
I'm Ben.
What's up today, man?
It is another beautiful day in Collegeville.
It is. We're just recording Excel videos, having the time of our life.
No place I would rather be right now, especially today. Do you know why today?
Why is that, sir?
We'll take a look at this goals list. We get to learn how to insert and delete rows and columns. We get to gain the ability to format our columns. And it's probably one of the most important Excel benefits, being able to copy and paste something using shortcuts.
That was an awesome transition, and I do fully agree that copying and pasting is one of the, it's so simple, as we're going to find out, but you do it all the time. When we think of those specific actions and descriptions as far as what we're going to do today, we're going to learn how to toggle between some open programs.
shortcut keys is what we'll be working on.
Insert a new column or row. We're going to learn how to quickly select an entire column or a row. We're going to select the entire contents of a whole worksheet. We're going to learn how to
Control
delete
A,
columns
just
or
like in
rows.
Word.
And yes, we are also going to learn how to copy and paste.
That's a great day. Let's get into it.
Yes,
Let's do it.
excited.
All right, so this template, we have, oh, you don't like this?
Oh, it's ugly.
This is actually data that we pulled in from the Home Depot financial statements to use for this template. And what the first skill we wanted to show you today was Alt-Tab, being able to switch from this screen quickly and easily to this screen, which is where our Home Depot financial statements actually
Alt-Tab is
are. I learned
cool.
this one when I was in public accounting, and it saved me so much time. When you have so many screens open, Alt-Tab is quickly switching in between.
I'm going to give a big thumbs up on that one. This one is huge as far as bouncing bouncing back and forth. You don't have to click all over the place. And frequently, sometimes you have a lot of screens open. Sometimes you only have two, but you're constantly trying to get info from one onto the next. You just go boom, 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 back and forth.
Even faster than like splitting your screen so you can see both
Yeah,
of it. So just a
totally.
little Alt-Tab to go
Love
back
it.
and forth. The sooner you get used to it, the better your life is going to be.
So I like that. Nice.
All right. So, Boz, when you see this, you obviously didn't like it.
No.
What is one thing you want to change right away to make it more readable?
Well, quick thing is I just want the columns to be a little bit wider. Is that what you were hoping for?
And that is exactly what I was hoping you would say. And there's a few different ways to do it. Let's start with slow and move towards fast. How about that?
I like it.
All right, so slowest way, if you just move your mouse over between the A and the B on that little line where it looks different like it does right now, and then you can click and just drag it over. And all right, I think that's about good. And now, oh, I didn't get it all. I didn't get it quite. So I got to click it, drag it a little farther. Still not there. All right, that's got to do it. That's pretty good.
You know, and that'll work, right? And reality is, if you're doing that in the real world, it's only taking you a few seconds. Not a huge deal until you think about how often you're going to do this. You can save a few seconds every time by doing it on a more streamlined basis.
It's all going to add up pretty
Yeah.
soon. So one step faster. I'll take this one and give you the last one. How about that?
Sounds great.
All right, so one step faster then between B and C. I can see the date's not exactly, visible necessarily.
Yeah.
So what I can do is, again, just wait till I have the same, arrow in between B and C, and then just double click on the mouse pad. And that automatically sizes column B for me to fit the width of anything in there, the longest string of text in column B.
Yes, I love it.
Hit me with a faster one.
Well, we could either highlight two columns at the same time and do it, or are you thinking of the whole sheet on this one? Which one were you thinking right now? Because normally when I do something like this, I go right to the whole sheet. Are you okay if I go
Yeah,
there
let's
right
go
now?
straight to the whole sheet. What Boz is mentioning, you can highlight a couple and then double click that way, and they'll go auto size in that regard. But I'm going to undo what I just did there and undo the one before that as well. It'll make this a little bit more impressive, your visual here.
Yeah. Well, frequently when I just get to a spreadsheet like this that has a lot of columns that need to be resized, what I want to do is just select the whole sheet at once and then double click between any of those columns really, and it'll auto size all the columns at once. Two ways that you can select the whole sheet at once. Some people will click right between that A and the 1. A lot of people will do that, and then what the point is now you just could double click between the A and the B, or between the B and the C, between any of them. Every column is resized. But I am a huge, if you could just give me a Control Z right now, undo that, and then click somewhere else off to the side. I am a huge Control A guy.
You are a big Control A guy.
Yes.
I don't use this one probably as much as I should, but it is pretty useful. So show us how it works in this context.
Show you how it works. Press Control A.
Control A. Wow, look at that. It's almost like A stands for all. So you're highlighting all or everything in the spreadsheet.
Absolutely.
Just go ahead and
Second
double click.
word.
Yeah.
Boom.
We're all out of size right now.
Let's get them an actual extra cool feature of Control A.
All right.
It's a sub feature, you might
Yeah,
say.
yeah.
So we said Control A shows you how to highlight the whole worksheet. It does. But let's click into our little table right here. If I hit Control A right now, it first just highlights my selection. And as long as I have the selection highlighted, I might as well just use that comma button that I like so much.
Yeah,
a
we
couple
learned
decimals.
we taught them last time on that one.
So throwback Thursday.
It is Thursday today. Throwback.
There you go. So, and then if I hit Control A again, then it'll go back to the entire sheet. So first it'll highlight if you're within like a table within your sheet, it'll just highlight that whole table, and then it'll highlight everything else.
Yeah, which is very cool.
Control
So
A.
I'd love to use it that way.
All right, next up, order of business is going to be adding in some subtitles here. So you got net sales and cost of sales. After that, you typically want to see a line for gross profit, gross margin, gross profit. I'm partial to gross profit today. You okay with that?
I'm good. Either way.
All right, so the slow way to add a row in this case, the slow way of doing that would be to click on 5 right there, and then
Right
click, and you can hit insert. And that's going to add a whole new row for you. I used to do that for a long time until I learned a better shortcut. And so my favorite shortcut for adding a row is to do Shift spacebar. That highlights the whole row. And then to add one, it's like adding addition. You need a plus sign. So Control Shift plus. And there you go. You have an extra row.
It's a little bit to remember, right? Shift spacebar, and then you got to do the Control Shift plus. But once you've done this one a couple dozen times or something like that, it becomes second nature. And you're going to be using Excel for a lot of years, right? So just discipline yourself, try to remember and practice something like that, and the dividends will pay off in the future.
Perfect. And so we'll go through and do the math in just a second here. But first, Boz, I want you to go through your way. After impairment loss here, we are going to add a line for operating income.
How I normally would have done it.
How would you add a row?
Well, and it's a little slower. Once in a while, it can bring up different features that can be handy. So I would be right there, and then I would hit Control Shift plus.
All right, so the whole row is not selected right now, just one cell in the row. Control Shift plus.
Yeah, and then I would just arrow down once to entire row.
Yeah, so with the arrow keys, you can move the radio buttons here. And so now I'm down to entire row. I just hit enter, and that does the exact same thing.
And that is slower. As you saw, when you did the Control Shift plus, it brought up 4 options for you. So sometimes you just want to put down certain cells. So that can be a time where you can use that. But if all you're trying to do is insert a row, the way that you demonstrated would be the one that people should try to remember.
Perfect. And then one more that we're going to do here, right above the provision for income taxes, we'll
Taxes.
go Shift space and then Control Shift plus. Boz, what do you want to call this line?
Pre-tax income.
Pre-tax income works for me.
Yeah, income before income tax. There's a lot of different names for it. Pre-tax
Profit
income.
before tax.
Profit before tax. Yeah.
There you
a bunch
go.
of different ways to say it.
All right, and then the last one is net earnings. That's already there.
Yeah.
So we have all of our rows added in. What we're going to do next is quickly enter in all the math that we need to do. So we learned this way back in lesson 1. To figure out our gross profit, you're going to hit the equal sign, arrow up a couple times to net sales, hit the minus sign, arrow up once to cost of sales, hit enter, boom, there you go. You got gross profit.
And people are now thinking you're going to go to cell C5 and D5 and just do that exact same thing. That's what they're thinking you're about to do.
I am not going to do. I'm going to hit escape as fast as I can to get out of that. And so this is probably, like we said before, one of my very favorite Excel shortcuts. I'm going to hit Control C to copy. Then I'm going to go over one to column D and hit Control V, and that's going to go ahead and paste it.
Control V.
And we'll show you how you can do that even a little bit faster next time. But again, it still has kind of like the dashed line around it. That tells me that that formula is still copied. So if I arrow over one more time to the right, I can hit Control V, and that same formula will post. So if I double click in this cell, you can see it's taking net sales in 2018 minus cost of sales in 2018.
Perfect.
And I'm good.
Yeah, you could also have right-click copied, right-click pasted, and wow, I mean that would be better than using this as a typewriter, doing it on your phone and just typing it in. But wow, it's just so much slower. Do that Control C, Control V. It's a lifesaver.
All right, so let's take it to the next step. Maybe combine it with something that we learned last time, where to get our operating income.
I'm going to pause here and I'm going to bounce out of the share for a minute. Officially, we're at the end of class time, so if you need to go, I will honor that. If you want to come back and look at this video, you have the benandboz.com, can feel easily access. There is 5 minutes left, which I will play out the rest. If you're able to stay, you're welcome to. But this is, again, for your edification. This will help you on your final project. This will help you in using Excel in general. Last night in our accounting and finance club, Excel was a #1. That's you want to be grounded well in Excel. Tableau, Microsoft Power BI, and Click was another one mentioned on the data analytics. Those are powerful tools. R and Python were mentioned last night. But Excel is the root of all success. And you are expected when you graduate to know Excel, which is why we're covering it. Any questions before I set you free? And like I said, I will in 30 seconds start the video and play the last 5 minutes, but you don't have to stay if you're unable or if you have someplace you need to go to. So I want to honor your time as well. Any comments or questions? Then I will continue to finish. Onward and upward. Play on.
We're going to take our gross profit, subtract selling, general, and admin, subtract depreciation, and subtract the impairment
Real
loss.
quick to do.
Okay, so we have $15,843 in operating income. I want to paste that formula over to 2019 and 2018, but only do one time of doing it. So I can hit Control C to copy it. You see the dotted line comes up, so I know it's copied. Then I'm going to hold the Shift key and then arrow over to the right 2 times.
Retake the quiz. Thank you for reminding me. I'm going to stop this for a second.
Boom, enter. There you go. It posted over, and now.
This section, I'm going to be offering a retake on the quiz, and I will have that available by Monday. Not everybody was here today, so I'll talk more about that, but it won't be due until Monday midnight. So you've got some time if you took the wrong quiz. And even if you didn't take the wrong quiz, you want to take another swat at the quiz, you'll have that opportunity. So thank you for reminding me of that. And I will make sure that we have that available to you. It'll be available this weekend, but it'll be due Monday night. So thank you for keeping me honest.
Now you can see that dotted line is no longer around that box, which means it's not copied anymore. If I go over here and hit Control V, nothing happens. I don't have anything copied.
After you've done the Control C, the Control V, I like to say, kind of keeps it alive if you're going to be doing it more times. Otherwise, you just hit Enter if you don't need to keep it alive. And frankly, it's it doesn't take a whole lot of difference in time. The Enter key is a little bigger, so I tend to, if I'm only pasting once, hit Enter. If you'd hit Control V, it would have been fine there as well.
There you go.
Yeah, and what Ben just did is he pasted into 2 cells, which you might be like, well, you didn't save a lot of time by just highlighting 2 cells in doing that. But what the point is, sometimes in the business world, you will work with hundreds, thousands, 10,000s, hundreds of thousands, right? I don't know if I've ever done into the millions, but there are people that do that, and you don't want to copy paste one after the other for that many times.
Exactly. All right, well, one last time for pre-tax income. Operating income minus our interest and investment income minus our interest expense. A copy, Shift key over to the right twice, and then I'll do it Boz's way and hit Control V in this case. There you go.
Why is that my way? I think Control V or Enter are fine.
I like
Enter too.
Good, I'm gonna hit Enter now. I feel a little bit better about it.
Don't call it my way. I didn't claim ownership for that one.
Well, before we get too distracted, we got a couple more things we want to show you with this one. We have all of our information. We're not going to worry about borders right now to keep this video under control, but it is nicer to add a little space between each year. Just let's add one more column in between just as a spacer. Yep. So my favorite way to do this is to hit Control Spacebar to highlight the column, and then to add one, Control Shift plus. There you go. And this one, it automatically comes out to the same size as column D did. I'm going to just manually click and drag that one to make it the size that I want. I think that looks good for a little gap.
Sure.
If we want to do the Boz method, we can just do Control Shift plus for this one. And this time, instead of entire row, we're going to arrow down to entire column and hit Enter. And there we go. boom, we have an entire column up.
Yeah. Ben calls it the Boz method. It's the one I usually use. I do think that Ben's is quicker, so I recommend that one. Again, with when he said my method, if you only wanted to paste certain cells over or something like that, or move certain cells to the side, that's when that one can be handy. But in this spreadsheet, you wouldn't do that.
I believe we got one more shortcut to show them. You ready for it?
I am. I'm excited about it.
All right, so I'm just gonna pretend I accidentally hit plus, a couple extra times. Oh, I have extra columns here. And now I want to remove an entire column. Just delete it all at once.
Yeah. Now, certainly, you would just, if you did it right now, what you would do is just hit Control Z to undo. But Ben's point is more like he comes in later to this and sees multiple extra columns, and he just didn't do it, so he can't just hit Control Z to undo.
Exactly. So I'm gonna highlight the column, Control Spacebar, and then to remove the column, I'm going to do Control minus. And now you can see we got rid of one extra one there. If I hit Control minus again, boom, we got rid of another extra one. And this would work as well without highlighting the column first. If you're just in column E in any random cell and hit Control minus, then you can, so now this says delete on top, we're gonna delete it. So then use the arrow keys to go down to entire column, hit Enter for OK, and there you go, it goes away.
I think that works. Yeah, those are some really quick tools, but wow, we use them all the time, don't we?
Saves a ton of time.
Absolutely.
All right, should we double check, make sure we covered everything?
I think we made it through it all.
You think so?
I hope so.
All right, well now hopefully you remember how to toggle between open programs, adjust column lists the fast way, not the slow way, insert new columns and rows, select entire columns and rows, select the entire worksheet, delete certain columns and rows, and of course, copy and paste.
I think we covered it all. So thanks everybody for tuning in to the Ben and Bob.
So thank you for tuning in. Now that was the extra 5 minutes. Any other questions before we part for the weekend?
Yes, sir. I had a question about the annual reports.
Sure.
So how long does it usually take for them to get delivered?
The annual reports usually within 7 to 10 days. If you did you stop by the classroom to pick those up to see if they came?
No, sir, not yet.
Okay. Chances are, if you ordered them more than a week and a half, 2 weeks ago, they're in the classroom right now, as I mentioned last class. They're by the window. They're in little plastic bags by individual that did a request. For some reason, they sent me all the annual reports in 2 big boxes with basically a single sheet email for each student, and I put it alphabetically by email address. So in the classroom,
even if you put your actual address, like your home address, they still send it to you?
if they very well might have. Most people did put their home address. So
Okay.
they bundled them together. I think they were saving on postage, and they just sent them all to me. That's why they're in the classroom now. So basically till Wednesday, you're covered. But I'm going to start using them on Wednesday. So
Yes, sir.
If at some point, if you get a chance to stop by the classroom to pick those up, that would be ideal. And then you'll have them in your hand, and whether you're in class or not, you'll be able to refer to them, and we'll be talking about those. But
Yes, sir.
chances are, if you ordered a couple weeks ago and you don't have them yet, they should be in the classroom.
Okay.
Thank you for asking.
Thank you.
You're welcome. Anybody else? Anything else? Then I wish you a good weekend. Even if you have a class yet to come, you can still have a good weekend. Look forward to seeing you on Monday. Take good care.
You too, thanks.
Thank you.